things. But is this a turning point for High Tide?
Shad, I wouldn't say this is the turning point. I think we came through that turning point a little while ago.
Okay.
This is our fourth consecutive quarter of free cash flow generation. If you average out the 4 quarters, we're averaging $5.7 million. This quarter was a home run with $9.4 million, but that can be lumpy given working capital consideration, so I cannot take all the credit for that. However, we have generated $5.7 million average free cash flow for the last 4 quarters. So our turning point happened a little while ago. We went from 3% market share prior to the launch of the discount club model to almost 11% today. Couldn't be more happier than that. Originally people said, Raj, we don't believe that somebody's going to pay for a membership to shop in cannabis stores. We proved them wrong. We have Elite today, which has grown at its fastest pace since inception for 3 quarters in a row now. So 226% year over year and 38% sequentially. So everything has been.
I kind of want to interrupt from time to time, and Raj Grove, I was actually one of those skeptics to believe that the membership would not grow that much, but they proved me wrong, and it's grown quite a bit. 44,000 members already. That's pretty good. I'm hoping to see like 100K one day, and maybe even like forbid 1 million paid members. That would be, High Tide would be an insane business if they can get 1 million people to subscribe to their membership. That's a lot of money. 1 million people paying like $40, $50 a year would be like $400 million. Like, that would be insane. But I don't know if they'll get to that point. I mean, that would be awesome if they did. Anyways, let's keep playing.
It's been going in the right direction. It's been going in the right direction for quite some time, Shad.
Yeah.
So I wouldn't say this is the turning point.
Yeah. Okay. Guap, go ahead.
Yeah, so on the first time I got to interview you, I asked about your origin story. I'd really like to zoom out and have you just outline some of your business units within the High Tide umbrella, because it's not an MSO, it's not an LP. We know you're a retailer, but you've also got some other business units as well. I'd love to hear just you outline those so people at home can understand who might be new to the High Tide story.
I was just going to say, you can spell it out almost as good as I can. But for everybody else to say,
yeah.
No, let me do that. You've done the honor of asking me the question, so let me do that. So we own Canna Cabana, which is the largest Canadian retail chain with 172 locations, and the second largest globally by store count. Only Trulieve is ahead of us with 200 stores as of yet. We also own and operate 3 of the top 5 consumption accessory platforms in the world, and 3 of the top tier CBD platforms, 2 in the US, 1 in the UK. And then we also, because of these platforms, we have 5 million total customers, including our Cabana Club members, which is now sitting at 1.43 million members, which was also up year over year by 38%. And very importantly, we have 3 million US customers that have been buying pipes, bongs, vapes, vaporizers, CBD products. Many of them are buying these products, obviously, to facilitate the use of cannabis. And we feel that we can convert these customers. So we've strategically positioned them, or we have them in our portfolio, and we can convert them upon a federal legalization event or a descheduling event, or in any event where NASDAQ allows us to indulge in plant touching businesses. The strategic rationale, Bob, just to get a little.
So that would be big. So Raj just basically said that if like those if the NASDAQ allows like Trulieve and Curaleaf to be on the NASDAQ, High Tide would be able to be on the NASDAQ. They are on the NASDAQ, and they'll be able to sell cannabis products on the online store. Right now they can't, but in the near future, if Trulieve, Curaleaf, Cresco Lab, whatever, manage to get onto the NASDAQ, that could be a potential catalyst for High Tide in the future.
A little bit more granular on why we have these two platforms. One, like I just mentioned, this existing customer base is very, very valuable. I don't think any of our MSO friends has this kind of large base of online customers across 50 US states. We do. And secondly, we strategically bought 6 of these businesses in 2021 when our stock price was, roaring. It was close to $9-10 at the time. And we bought, these high margin, high EBITDA generating businesses. The gross margins back then were 70-80% if you average them out. Today, they're still, 55% as per our last reported quarter. We bought these businesses for 2 reasons. One, so, we could use these margins because we have low margin business in Canada, our discount club model. We wanted to launch that in October. So we went, on a bit of an assault from June to November, buying these businesses, accumulating these margins, and starting price wars in Canada, which we knew nobody was able to compete with us, right? So we did that very, very successfully. And still, they're strategically positioned there. If someone wants to wake up one day and say, let me just mess with Raj or High Tide and, let us develop our own discount club model, well, I'll just go open up my portfolio even more and we'll get even more diversified. So it has a couple of different strategies baked into it, but this is why we have our main brick and mortar segment, which is roughly $460 million Canadian dollars in revenue, and the remaining is e-commerce platforms.
Yeah.
So you talk about growth. I know that you've jumped from single digits to double digits, sitting at about 11% market share right now. The goal is 15, if I'm not mistaken, to get to. Obviously, as you're growing this aggressively, other retailers in Canada are losing market share. I mean, how do you get to that 15% overall? And I mean, what kind of timeline should we be thinking about? Is it M&A? Is it organic growth as the competition just starts to phase out of the market? Like, how do you get to that 15% number?
Yeah, so Anthony, we just keep on doing what we're doing. Before we launched the discount club model, we were sitting at 3% total market share. In about 2.5 years, or almost 3 years now, we come from 3% to 11%. It's any retailer's dream. So we're going to do exactly what we are doing. We build our portfolio, which is 172 stores, 60% organically, which is greenfield, and 40% through strategic and accretive M&A. Nothing is going to change in terms of that planning. We added 10 stores organically this year. We communicated to the market we'll add 20 to 30 stores. I think we will meet that target that we communicated at the beginning of this year. And then we're still looking at supplementing it with M&A. We are having conversations right now with single, doubles, and some of the larger blocks. So if you supplement that, we will have more stores. And by the sheer nature of that, Anthony, will have more market share. If we're sitting at 11% today, my best guess is within the next 1.5 to 2 years, we could hit 15% market share in the country.
Big growth, to say the least. What do you think is the biggest thing you're learning amongst your consumers? Because you're at 44,000 elite members now. And, as you said, no, you couldn't really sell cannabis to people online, but now you've got a membership of over 44,000, 1.43 members of your Canna Cabana membership as well. So what's this say about Canadians in general, like what their buying habits are? And what are some of the biggest, most popular feedback that you get amongst Canadians as to what you're doing or what's missing, I guess, in the market and how you're capitalizing on that?
Yeah, Shad, great question. So, numbers don't lie, right? We've got some great data from our 172 stores, and we've been leveraging this data quite well, not just by the sale of this data to our strategic partners, but also by reading and understanding this data on what it's telling us. And very quickly, we figured out that 70% of Canadian cannabis customer cares deeply about price. And we were perfect. We were already manufacturing consumption accessories abroad, and we had the seed to sale margins in that. And we said, now, how do we do that in cannabis when everyone else is buying cannabis from the same provincial regulator? And this is why, Shad, we bought these ancillary cannabis businesses so we could really position our core business of brick and mortar. We read into that data, and now we please our customers and our club members with the lowest price guarantee, with the largest selection, which we also learned by data that customers gravitate towards high selection. They want selection at the best price. They want a normal retail experience. They don't want to come to a store 3,000-4,000 square feet like some of my MSO friends are doing in the States, which I'd love to dig into with you guys. I don't know what's the benefit of that. You got to provide them a retail experience that they can submerge themselves in and build those baskets. So we've learned a lot from our data, and we're using it very, very well.
Yeah.
Well, let's talk about south of the border, since you brought it up with the MSOs. So what would your entry or what would the strategy be to kind of come into the US? Because you talk about price, and I mean, talking about price, markets such as, let's say, adult use conversion. So Ohio, markets like Delaware, Connecticut. I mean, you really fighting on price is going to be pretty difficult. So, I mean, is it going into markets like Colorado and California and the Missouris and the Oklahomas of the world and bringing that discount model? Like, what's the strategy there to come in and win the consumer in the US, like you've obviously won the consumer in Canada?
Great question, Anthony, and would love to dig into this with you. So look, I'm not going to lay out my entire US strategy. I hope I hope my track record speaks for itself, or High Tide's track record.
I spoke to it in length on Friday. So
very cool. I will look that up, Anthony. But to give you, I would love to dig into this a little bit so you get a little bit more understanding. So look, I think we definitely have the second movers advantage getting into the US when the time comes. Real estate size and quality of competitors has been, how our competitors in the US are looking at real estate is completely not making sense to me. I've been looking at these stores. They're massive in sizes. We don't have that issue. My stores are 1,200 square feet, 1,500 square feet, but they generate $1,500 per square foot. I don't think that is the case with our MSO competitors. Maybe they have higher sales per square foot right now, but that is only because real competition has not sunk in yet. It's not a fully federally legal territory yet. They're also playing with 50% margin profiles. Here, we just hit a 9-quarter high at 28.4% gross margins, which make me very happy. And we're spitting out, $9 million in quarterly cash flows and have turned into, net income positive. So imagine all of this, plus our experience here in Canada. We have experience with Greenfield. We have experience with strategic and accretive M&A. You can see what we pay for when we buy these stores. We have 3 million US online customers. I'm giving you these high-level points without really getting into the deep strategy. We have 3 million US customers, which I alluded to in the beginning, that we can easily start converting. These customers are buying pipes, bongs, and vapes. We all know why they're buying this.
Yeah.
And we all know, what these big e-commerce platforms are capable of. Like Grass City and Smoke Cartel get 20 to 26 million site visits a year. Even if they didn't make me any money right now, they're strategically so important to have, and to have this customer base that we can turn on in certain states where online cannabis sales will be allowed, just like we have it here in Canada. Almost 70% of the Canadian territory we can now sell online. I think it'll be the same in the US when those big events happen, and we'll be ready for that. And then overall, again, I will just take you back to our track record. We went from $8 million to $500 million in just 5.5 years, right? We built consistent and strong free cash flows, rapidly gain market share, both organically and through strategic M&A. So, we feel that US will be no different. If it's at 55% margin profile right now, again, I don't want to get into the strategy too much. I see no issue at all. In fact, I'm looking forward to that opportunity.
Have you contemplated launching Delta 9 hemp-derived products in the States to cater to those millions of consumers that are currently on those lists? Because that would enable you to launch a full-blown e-commerce strategy that is compliant, to my knowledge, with the NASDAQ.
It's a little bit of mixed bag for us. So we do sell a couple of cannabinoids outside of your traditional THC through Fab CBD and New Leaf Naturals. But we have to be extremely careful. We trade on the NASDAQ, and every single month we get new opinions from our law firm in the US that we use. And, a new cannabinoid is banned and the next one is coming in. And look, at the end of the day, we need to focus on our core business. That is not our core business, although we are indulging a little bit in it. It's just changing by the minute. California got extremely strict on that very, very recently, and they're taking these cannabinoids out. So it's a game of cat and mouse, and we don't necessarily want to play this game, although we are currently looking at fortifying this cannabinoid spread in the US a little bit to fortify our e-commerce platforms in the short run, or just temporarily right now. But I am talking about the big games, Anthony, when federal legalization happens or a descheduling event happens, when we are able to open brick and mortar stores, we want to supplement that with our online platforms that can also sell cannabis products.
Yeah. That makes sense.
Makes
We
sense.
actually had a conversation earlier with an executive, and I think a lot of this is the focus for a lot of cannabis companies now. Let's not focus on the national footprint and be like a Walmart and more like a Publix, which is more of a regional play. You guys have branched out Western Canada. You are now dipping into the Ontario market. We've indicated this before, the cap size increasing from 75 to 150. And I keep asking this question each time that you're on the podcast, but I like to ask it over and over again. These perceptions about the Canadian market, and even specifically the Ontario market, which has 14 million people. Like, what are you seeing as far as growth and trends that you've, I guess, learned over the past, say 6 months that gives you that opportunity to capitalize off of increasing your cap size to 150?
Yeah, 100%. So Shad, our same store sales are up 111% over the last 10 quarters,
Wow.
while the average operator in the country is down 10%. And we can thank this to the province of Ontario. In the province of Ontario, our average store generates $3.4 million. Our peer average has gone down to just $923,000. Huge difference. And then nationally, our stores generate $2.6 million as an average. Our peers are now down to $1 million. So we know that our innovative discount club model is winning. Ontario is now going to allow us to add another 87 stores in the province. We're sitting at 63.
Yeah.
Conservatively speaking, if we do $3 million per store, you can do the math. We'll still end up with another $225 million in revenue just from the Ontario market. We're still going to add another 40, 50 stores in Alberta, Saskatchewan, and Manitoba. British Columbia is also considering a store cap increase, although they're not there yet. So when you couple all of this, our long-term strategy is to have 300 stores in Canada. I think we can get to $800 to $900 million in revenue from the Canadian market alone, which is a baby market when it comes to, in front of the United States. So California alone is slightly bigger than Canada, or the same size of Canada. So just imagine the opportunity we'll have in the US if we've learned to do what we are doing here in Canada. And I'll tell you this, we fought with all kinds of competitors. We fought with the independents. We fought with the smaller regional chains. 6 of our publicly competitive peers have gone bankrupt now. It's not easy to win here. And Anthony, I'm hoping you're paying particular attention to what's happening in this country, because if 6 publicly competitive peers.
Oh yeah, I could name the tombstones of your peers. Trust me, I've paid very close attention to what you've done. I basically said Friday, Canadian retail runs through High Tide.
But think about this. Thank you for those kind words, Anthony. I appreciate it very much. But just think about it. I don't hear many American operators going bankrupt yet. So we're playing in the bankruptcy world and producing these numbers. Hopefully that gives you some extra confidence.
Well, I will say you've got quite the following. Tank Abbott writes, my wife is begging me to take her to the hospital, but I'm waiting to see what Raj says first. So there's the kind of following you have.
Tank Abbott is my absolutely other favorite barnacle. Okay. And I can name 10 more, but thank you so much, guys. Our barnacle army is the best.
So we are going to be down on Parliament Street later this week doing some interviews, going to have a walkthrough. So anybody that wants us, any kind of footage you want us to film, please let us know in the comment section below. But any advice when we show up to the dispensary on some of the things that we're going to anticipating to see, Raj, or any good questions that we should ask pertaining to the actual location itself?
Is Anthony going to be with you?
He is.
I'll be with Shad.
All right. So one thing I can tell you both is to pay particular attention to the way we do our displays. It's a very open and retail friendly layout. I speak all day about our unbeatable prices and about our unbeatable selection, which you'll see in the Parliament store. But also pay particular attention, if you can, please, to our open retail layout, which our customers appreciate very much. Because you can actually, most of the stores in Canada, you have to keep, most people just pull the products from the back and bring it. It's kind of boring. That is not the case with the Parliament store. I think, Anthony, you'll appreciate it when you go there.
Cool. I look forward to it.
How far is that location from the distillery district in Toronto? Do you know?
I think it's literally 10 minutes. Yeah, I used to live in Toronto for 6-7 years. So it's from Distillery District. It's about 10 minutes, maybe.
It's a booming area, that's for sure. I know they built a whole city around the Pan Am Games that came there probably 10 years ago. And since then, tons and tons of condos. As much as people are working virtually, that city continues to grow and grow and grow. It's massive. But high rises, I think there was 132 cranes just on the skyline alone last year. all the condo buildings that are going up in Toronto, and it's no signs of slowing down. So gives you a real idea of like what opportunity presents itself in that market alone. But listen, great job on the numbers. Always have these interviews are pretty easy to do with you every quarter to highlight some of the numbers that you've done. But I think on behalf of Guap, Anthony and I, and the whole crew that's big investors and followers of this space, keep up the great work.
Thank you so much for having me, guys. Really appreciate it.
Yeah.
Thank you.
Raj, appreciate your time. All right. That was great.